Hedge fund managers beware because the meme stock frenzy is back big time. More than a year since the video game firm GameStop became the center of financial markets, retail investors on the social media platform Reddit have found their new favorite. This time, they're buying up shares in Bed Bath & Beyond, an American big box chain that sells blankets, towels, and candles. It saw revenue fell 25% in the first quarter. Normally, that would send a company's stock plunging. But shares have risen for 9 straight sessions. Its rally overnight saw a 39% surge, and its market capitalization has now doubled to $900 million. The original meme stock darling GameStop also rose almost 9%, while the cinema chain AMC was up 13%. Now, for more on the story, let's go to David Madden, a market analyst at Equiti in London. Welcome back to the program, David. So can you just tell us, what is it about these companies that puts them at the center of these meme stock buying frenzies?
Well, this is all kind of driven by people chatting away on online forums, most notably the Wall Street Bets forum on the website Reddit. And essentially, it seems as if traders are trying to kind of almost replicate what we saw in January 2021, where a bunch of retail investors, retail traders were chatting to each other about trading ideas. And it was also quite well known in the case of GameStop that a very large portion of its free-floating shares were shorted, predominantly by hedge funds. And when you have a scenario where a very large amount of your overall shares are lent out for short positions, those hedge funds can become quite vulnerable to any kind of sharp upward moves in prices. So you had all these people online chatting to each other saying, in the case of GameStop, let's buy up this stock as a way of actually squeezing the price higher. That will then force some of the hedge funds to actually, either force them out of their position, or else they'll have to take on more, pump in more cash to actually maintain their open position. And we saw that a phenomenal, absolutely colossal spike in volatility in GameStop shares in January, February 2021. And now it seems as if, Bed Bath & Beyond has kind of sort of coming into that same situation, whereby, once again, people are going online, chatting about the stock. Bed Bath & Beyond, something like in the region of 46% of the free-floating shares on the market are actually are short positions against Bed Bath & Beyond. So essentially, it is quite vulnerable to any upward moves in price. And of course, if there's such negative sentiment surrounding the stock, the share price was coming from a low base. Earlier, only about 5 weeks ago, 6 weeks ago, Bed Bath & Beyond shares fell to a 2-year low. The share price was below $5 a share, so it was relatively cheap. And then yesterday we saw the share price power ahead. At one point, it was up over 60%. It was north of $13 a share. So it's been a considerable jump in a matter of weeks. And of course, the more you have these extreme moves in price, the more people talk about it, which adds to more fuel to the fire.
All right, David Madden, thank you for joining us from London at Equiti Capital.